Yo, hello everyone. Hope you're well. Hope you can hear me and see me. Um, I just wanted to jump on. It's been a while since I made the last video. I've been testing out a new strategy. So today I just wanted to jump on and talk to you guys about the 4 hour candle closure. Um, as you can see, I've back tested and forward tested this over the last few days. And this is not my strategy, by the way. I don't take credit for this strategy at all. This came from a guy called Tom, professional day trader. It's called Tom Camp on YouTube if you want to go check him out. Um, so yeah, I was going to give you a basic run through of what he's explaining, just in case you guys haven't seen it. So a couple of trades um, are on at the moment, just testing this out, forward testing. That trade won. This trade won. These two trades won. This trade is currently ongoing. These two trades won. These two trades won. The one trade won, and this one is currently ongoing. This one is still ongoing. This is just paper trading account. It's not real. It's not my live account. I'm just testing things. Silver, I think I lost. I won one and I lost one on silver. I won on oil, and I won two on the Nasdaq. So, what is the 4 hour candle close? In hindsight, let's say we're in a bullish market, right? We have high highs, high lows, high high, high low, high high. And we have this sweep of liquidity just here, which is called manipulation. So on the chart like this, you would see a wick on the 4 hour time frame. Don't use any other time frame. We're staying on the 4 hour time frame. On the 4 hour time frame, when you see a wick like this in an uptrend or even a downtrend, and it closes above the previous 4 hour candle, that there would be my entry. Stops below the wick and go for a 1 to 2. And it literally is that simple. Easy as that. So I thought I would do some testing. So I'll show you on a chart. Let's go. Let's just go over here somewhere. Gee, I forgot about these trades. That won, that lost. That was a pretty decent trade there, to be fair. So 4 hour candle close, that trade also won. 4 hour candle closes, right? So, for example, let's see if we can find one right now. Here's one, for example. This one right here. So we've got uptrend, got a few bullish candles in a row. We have this sweep just here. So we swept this lower candle, the previous 4 hour, and we closed above. That close would be your entry. Stops just below, a little bit of breathing room, 1 to 2. Absolutely easy as that. Simple stuff. Granted, this would have took what 1, 2, 4, 8, 12, 16 a day to play out, which is in hindsight is not bad at all. And you can keep riding this bull trend here. Massive candle. Look at that sweep below this previous candle. That's called manipulation. Enter longs, stops below that. That's all you want to do. Just on this uptrend there, you have two winning trades. So even if no candle sweeps below, but it also leaves these imbalances, you can also look at that entry as well. So if we're looking at that imbalance, I would then drop down to the 1 hour. Where have I just lost it? There we are. I'll drop down to the 1 hour. I would see what's going on. This tapped into the imbalance, didn't really close below it. You could have entered here for a 1 to 2. So I would have entered off the imbalance. I would have probably put my stop loss there and would have got a start target. You don't really want a big stop loss like that. But I guess 50 pip stop loss, reasonable if you're that kind of guy. Even if you wanted a 1 to 2, you would have got it. Just like that. Excuse me. Very, very, very powerful way to enter the market. It will work on absolutely any Forex pair. Gold it also works on, but gold, you can lose a lot of money on gold. Gold is a very manipulative market. Gold is kind of doing some crazy things right now. We're at 4,300 on the gold, which is kind of crazy right now considering everything that's happening. Normally when there's a war or conflict and in the Middle East and times of uncertainty, you would see gold doing this. But gold is doing the opposite, which is raising questions for a lot of people. But yeah, I'll show you another example on a different chart. I won't show you them two, I'll show you something else. Backtesting, all that stuff. Let's try bearish scenario. So 4-hour time frame. Oh, for fuck's sake, I've lost it. Where was I? Let's just choose a random bearish. So we're bearish here, right? Yeah. Huge move to the downside. We've got a break of structure there. That pretty much confirms we're bearish. This whole thing confirms that we're bearish. Double top pattern. Good. Also a good indicator that we're turning bearish. You could enter that. That's a different strategy, but we'll talk about that another time. This is just the 4-hour candle close and how powerful it really is. So, where can we find a bearish sweep and close? Bearish sweep here. 4-hour candle. We swept above the previous 4-hour with a strong close below. That would be my entry for a short. Stops just a little bit above. 1 to 2. The win rate on this is you would just enter this trade and leave it. That's all you would do, and you're out within a couple of days, depending on what kind of pair you're going for. GBP, JPY usually is quite a volatile pair. I'll show you another example right here. Let's just go here somewhere. Let's have a look. Okay. That's not too bad. That one, that one's reasonable, but I probably wouldn't enter there as I'd like it to close above the wick. But even still, if you're engulfing the body of the previous candle, it doesn't really matter if you're engulfing the wick. But if you're engulfing the previous body with a sweep below the previous 4-hour, that is your entry to go long. Like the win rate on this is just insane. I don't know how people have not picked up on this. You would not be in any drawdown, or you'd be in a tiny little bit of drawdown when you first got there. But other than that, you're just straight to TP. There's no fucking about. And I don't know if Tom got this strategy from someone else. I don't know if it's his strategy but the 4-hour candle close, absolutely beast in the market. It's the best way to enter the market at the moment. This is a pretty risky move on my end. We're at USD yen. I probably wouldn't have. I shouldn't have entered here. I'm just testing things because this move right here is a massive institutional move. Like big boys have come in and placed their orders here, so I could potentially. This is either going to go one or two ways. You're either going to. Where did I enter on this trade? Here. Why did I enter there? I'm not too sure why I entered there, to be honest. That's not. What was I doing there? I don't know why I entered there. What the fuck? Did we have a sweep and close? Not really. I think here we go. I think I marked out this imbalance in there somewhere and then come off that. Yeah, so off the imbalance, it tested. I entered. Yeah. Fair enough. But yeah, for this trade, it can go one of two ways. You're either going to come crashing down around here, maybe. But my theory is there is some stop losses above here. That to me is liquidity. So I'm going to say buy side liquidity just there. Let's check this out. Buy side liquidity. So if you've got your take profit, just at that range, not at the wick. You don't want to go. Some people are going for like 1 to 5s. It's unrealistic. A 1 to 2 is just fine, but a 1 to 2 minimum is fine. Because if you take a losing trade, you're still at a break even, which is good enough. And considering that I've been testing this strategy, I've got one. Yeah, I won that trade. That took a while to play out, to be fair. I mean, if I had a tighter stop loss, maybe I would have got that here. But, that would have took a couple of days to play out. Again, here, bearish scenario, sweep above the previous 4-hour. The second candle kind of closed there. I entered off the imbalance. So just right at the imbalance, stop loss above, target at 1 to 2. You can just enter straight off the 4-hour chart, but if you've got an area of imbalance, let's do here for example, if you've got an area of imbalance like this, a lot of times you can wait for a retracement, enter off the imbalance like that. Obviously that's a loss, but that is also another way to enter the market. If you're entering off the imbalance, you normally drop down to a smaller time frame, the 1 hour or 30 minutes. You don't really want to go any lower because you get all the noise and all that sort of stuff. You don't want to be involved in that crap. Let's find another example. Here we go. 1, 2, 3. A couple of candles in the bullish direction. I mean that. It's a bit choppy, I suppose. I probably wouldn't enter on that one, given the price action. That would technically be a break of structure, but we had a break of structure up there. Yeah, I probably would have waited a little bit for that one. Here, good example of the imbalance, right? So we have this area of imbalance just here. Okay, I don't want to drop down to the smaller time frame just because I'll lose the spot where I'm at. But just to get the gist of it, we're going short, clearly. So I would enter maybe 50% or possibly 60%. A lot of times I kind of, if I'm doing that, I'll enter off the tap of the imbalance with the stop just above. Because as you can see, sometimes it just taps and then it just goes 1 to 2, job done. Easy as that. And that is a minimal drawdown trade. You're in drawdown for a couple of minutes and you smash and you take profit. Even if you wanted to, you could trail your stop loss. Just don't take any profit. If you want to watch it all day, I don't. I'll place that trade. I'll set it and I'll forget about it. Then I'll come back in a couple of hours. I'll check on it. I won't touch my stop loss. I won't touch my take profit. Just leave it where it is. That's the best you can do. This one is the last one on the chart that I'm testing right now. We are currently in a bearish trend. We had the sweep of the previous 4-hour candle. I don't know if you guys can see that. We have the sweep of the previous 4-hour, close, a strong close below the previous 4-hour. That would be my entry. Don't get me wrong, there is a fair size stop loss there. There is also an area of imbalance there, which you could wait for a retracement if you wanted to get a better entry and a better stop loss. But entering on the 4 hours, absolutely fine. In my eyes. So yeah, all you want to be looking for is sweep above previous 4-hour, close over, like engulfing the previous 4-hour, enter, set your stop loss, set your take profit 1 to 2 minimum, and then you'll be making money in the market. If you're going for 1 to 2, this win rate is pretty fucking high. So I think that one won as well. Yeah, that one won. That was buy side liquidity there. 0 drawdown, smash take profit in 1 4-hour candle. 4 hours you're out of that trade, done. Yeah, that's pretty much it. So if you have any questions or if you want to know any more about this strategy, then get in touch with me. I'll drop a link to the Discord in the description. And then if you want to do live one-to-one sessions, completely free. I don't charge anything. I've only been trading a year myself. So I'm just back testing. I've not really put any real capital into day trading. I started off scalping. Not really for me. Lost a lot of money in scalping. Not really my poison. So this strategy is perfect, to be honest. It's probably the most powerful way to enter the market. So yeah, I'll leave it there. If you have any questions, like I say, just hit me up on Discord and then we'll go through it. Peace.